Okay, this is the 2013 Paper 2 Question 1. It's the double entry bookkeeping question for OXO Limited. And if it allows me to minimize this here, we can get going. For some reason it's acting up. No. I'll just move it down here. Okay, so the question said OXO Limited, a machinery business, has both credit and cash transactions during the month of May 2013. Part A says record the following credit transactions in the sales and sales returns books of OXO Limited for the month of May. Post relevant figures from the books to the ledger accounts. So let's start by doing that. So you get your I call them sales day books. Sales book is fine as well. So you start off here with your sales book, and you put in the first transaction, which is on the 1st of the 5th, 2013, and OXO sold goods on credit to KP Limited. So they gave them the goods and they're expecting payment at a later date. Now KP Limited is going to become debtors ledger account number 1 in the debtors ledger, and the amount was 26,000 with VAT of 23%. Now I don't know why that isn't working for me there. I thought it should work for me. No, it's not. Okay, I'm just going to sum them up here. Okay, and the second transaction was on the 7th of the 5th, 2013, and this was SLD Limited. SLD Limited, we issued them with invoice number 12, and they're going to be debtors ledger account number 2. And the total there was 14,000 with the VAT, giving a total here of 17,220. Okay, excellent. So I can total up the columns for the sales book now. This 40,000 figure here is going to go into general ledger account number 1, and the second account in the general ledger is going to be a VAT account, where this 9,200 is going to go when we're doing our double entry bookkeeping. While I'm at it, I'm also going to put in the returns figure. So the returns were on the 18th of the 5th, 2013, and KP Limited, who we sold goods on credit to, returned some of those goods. We issued him with credit out number 3. His account is debtors ledger account number 1. We're going to open in a minute, and the total was 11,600. 11,600, which, if I just add there and here as well. Now, you don't necessarily have to total up here, but it's good practice to do so, even though there's only one figure, there's only one entry in the sales returns book, or sales returns day book, whatever you want to use. This figure here is going to go into a new account in the general ledger, which is called sales returns. That's going to be general ledger account number 3, and this one is going to go into the same one as here because it's VAT. It's going to go into general ledger account number 2. Okay, we've entered the transactions, these credit transactions. So we've sold now, get paid later. We've entered those in the sales book and sales returns book. The second bit of part A said post relevant figures from the books to the ledger accounts. So we're going to go to the ledger, and we're going to label it the debtors ledger. And within the debtors ledger, the first account is KP Limited account number 1. KP Limited account number 1. Now we know from our Earl rule that if you're making an asset bigger, which is a debtor is an asset, somebody owes you money, you own their debt, that's going to go on the debit side. And the amount is on the 1st of the 5th. Sorry, it should be in black. Just a sec. So on the 1st of the 5th, 2013, what is it here? It's credit sales coming from the sales day book, or the sales book coming from here. That's the total amount including the VAT, which is 31,980. 31,980. Now, it's often good to read ahead down into the question to see what other entries, how many other entries are going to be in the KP account, so you know how many lines to skip. If unsure, skip extra lines. Sorry, I think we're going to be fine here with 4 lines. There's definitely plenty of space there. And we're going to come down and we're going to open an SLD limited account. Likewise, SLD is a debtor, so our credit sales to them is going to be entered on the debit side on the 7th of the 5th, 2013. Credit sales, SDB, and that is the amount including the VAT, which is 17,220. That comes from here. 17,220 total including the VAT. So at the moment now, between these two figures, I have 49,200 on the debit side. Double entry bookkeeping says every debit must have a credit and every credit must have a debit. So I'm going to come down to my ledger here, skip another under there. If you skip 4 lines, you should have plenty of space. We're going to open a general ledger. And I told you back here, the first account of the general ledger is going to be a sales account. Okay, and here it is, sales account. We know from our Earl rule, if we're making a revenue bigger, which sales is, it goes on the credit side. So we're making this account bigger, it's going to go on the credit side, the entry. And obviously with double entry, that dictates that as well. So the end of the month, 31st of May 2013, I'm going to put in the total debtors, the total amount of the debtors together. So the total figure from here of the 40,000, excluding the VAT, goes into the sales. Because the VAT doesn't really represent your sales. So that's coming from the SDB, and that's 40,000. Okay. And then I can skip a line under there, and I'm going to open a VAT account. Now, there's normally a few entries in the VAT account. So also on the credit side, now this should be in black, I'll change it afterwards. What always in the VAT account say what the VAT is on. The VAT is on credit sales, coming from the SDB, and it's this figure here. It's 9,200. So 9,200. So double entry bookkeeping complete here. 49,200 of debits between these two figures here, and 49,200 of credits here. Okay, the last figure that I have to post is the sales returns. I'm going to so the sales returns was to KP Limited. Well, fairly logically, if sales is on the debit side, it's making the asset bigger. Sales returns makes the asset smaller, and it's going to go on the credit side, and that's what our Earl rule says. So 18th to the 5th, 2013, credit sales returns, coming from the sales returns daybook, and the total, including the VAT, is 14,268. 14,268. Sorry, that should be 8. 14,268. So I now have 14,268 of credits. I need 14,268 of debits, and they're going to come down here in 2 accounts. Skip 4 lines under there and open a sales returns account. Okay, and into that sales returns account is going to go one figure here, GL3, general ledger account number 3, this figure here of 11,600. So you're going to have 11,600. Always post the totals from the daybooks at the end of the month. 2013 total sales returns coming from the SRB is 11,600. So we have 14,268 of credits, we only have 11,600 of debits. The other debits are going to go here into the VAT account, and they're 2668, 2668. So 31st of the 5th, 2013. What is the VAT on? Well, it's on credit sales returns. I was right what the VAT is on. Coming from the SRV. Okay, so part A is now done. I have done my daybooks and I've posted the figures to the ledger, and every debit has a credit in the ledger. Part B then says record the following bank transactions for the month of May 2013 in the analysed cash book of Oxo Limited. Post relevant figures to the ledger account. So the analysed cash book here, two sides. Left hand side is debit, right hand side is credit. Money coming in goes on the debit side, money coming out goes on the credit side. If you enter something on the debit side here, every euro in the bank column here on the debit side must have a credit somewhere in the ledger, and likewise every euro on the credit side in the bank column over here must have a euro of debit somewhere in the debtors and general ledger. Okay, so the first transaction we see there, or the first thing it says, note, analyze bank transactions use the following money column headings. So on the debit side you'll always have date, details, receipt, then receipt number, folio, and bank. And then the other columns are sales, they tell us in the question, VAT, share capital, and debtors. Okay, now I've made a rookie error there. I should have titled my cash book. Always title your accounts. There's most of the time there is marks going for these. Oxo Limited for the month of May 2013. Okay, share capital, and then the credit side, the question is telling me credit side is bank, purchases, VAT, and wages. So this is where you analyze the different expenditures. Obviously you've check number over here instead of receipt number over here. Okay, so the first transaction was on the 4th of the 5th, and the shareholder invested 60,000 and this was lodged. So if a shareholder invested 60,000, that's money coming into the business, so it's going to go on the debit side. So 4th of the 5th, 2013, share capital, and we issued them with receipt number 1, that should be in red. That's going to go into the next available account in the general ledger, which I know is general ledger account number 4, and that is 60,000 under bank. Everything gets entered under bank, and then one of the analysis columns as well, 60,000 there, so that's all black. Okay, then 11th of the 5th, purchase for resale. Was obviously if you're purchasing things, it's money going out. They're for resale, so it's going to go into purchases. So 11th of the 5th. Now what I like to do is I like to enter all the transactions first. Some people would enter each transaction and then open up the ledger and post it as you enter it. It just can take a bit of time swapping this between the sheets, so I like to enter all the cash transactions first. So purchases with check number 1, folio, well that's going to go GL, the next available one is GL5, there's also a bit of VAT on that, so it's going to be GL2 as well. And the amount is 24,000 plus 23% VAT on that. I'm just pulling out the calculator here. So we have 24,000 multiplied by 3, so that's 5520, and then the purchases was 24,000, so that gives us a total there of 29,520. 29,520. Okay, the next transaction is paid wages, money going out again, 17th of the 5th. So all these will have a corresponding entry on the debit side here, and the debit side in the ledger because I'm entering them on the credit side here. So wages, and my wages were paid with check, and that's going to be the next available account in the general ledger, which is general ledger account number 6. 7,200 there and 7,200 there. Okay. The next transaction, sales were lodged. So that's money coming in. We're going to go back over here. And that's 26th the 5th, 2013. Sales. And we didn't issue a receipt number there, from what I can see. The sales account we know is GL1. And the VAT account is going to be GL2. That should be in black. And the total is, they tell us in the questions, 34,440, made up of 28,000 of sales and 6,440 of VAT. The last transaction is SLD, who's one of our debtors, somebody who owes us money. SLD Limited, here's their account. SLD paid 10,000 and this was lodged. That's money coming into the business here. So 31st of the 5th, 2013, SLD Limited, and we issue them receipt number 2. They are debtors ledger account number 2 is their account, and that is going to be, that's 10,000, so 10,000 under bank and 10,000 under debtors. Excellent. So now what we have to do is we have to balance the analyzed cash book. So the first step towards balancing is you see which side is larger, which bank column is larger. So I can clearly see that the bank column total on this side here, I'd just like to do a bit of rough work down here. So the bank side, or the bank total there is just a sec. So I'll do it here. The debit side total is 104,440, and the credit side total, it looks like it's going to be less anyway. Yeah, I can see it here. Is looks to me like 36,720. So that's a positive thing for the company. Obviously, more money coming in than is going out. So whichever amount is larger. Now, so what? Well, sorry. First things first. I want you to skip your line. Well, you can actually get away with just drawing your double line straight under the SLD in this question, it looks like. But anyway, good practice. Skip a line and draw your double line the whole way across. Then, whichever figure is larger, which is the debit side in this case, put that in between the double lines of the bank column, under the bank column on both sides. So again, over here, 104,440. 104,440. Now, 29,520 plus 7,200 does not equal 104,440, and that's where we get the balancing figure. What is the figure that is missing here? What will balance this account? And the balancing figure is when you subtract 104,440 from the 36,720, and you get 67,720. And that is at the end of the month. That is the balance. So the 31st, the 5th, 2013, the balance. And you say CD for carried down, you're going to carry it down to next month, is 67,720 above the line on the credit to below the line on the debit. So the first of the next month, which is June 2013, balance BD, and that is 67,720. Okay. You also must just put the totals for each analysis column. Now often in the junior search there's just one figure in between the lines, or in each analysis column, but with other questions, I know if you get a full analyzed cash book question, and you put the totals between the lines, sorry, but if you get a full analyzed cash book question, there'll often be more than one entrant, and there'll be more than one entry in each analysis column, but in this question it's just one, so you put those totals in there. Now, the first part of the question said record the figures, and we've done that. Now we have to go and post them to the ledger, which is the second part of part B. That's what it asks us to do. So we have to post these to the ledger. So I said every euro of debit here will have a euro of credit over on this side, on the right hand side here, and every euro of credit in this bank column we'll have a euro of debit over here somewhere in this ledger. Okay, so I'll do it for one by one. What's a good practice to do when you're doing these is just put a little tick here as you do the transaction. So the first one, share capital, is on the 4th of the 5th, and I said we're going to open a new account in the general ledger, so we're going to call it ordinary share capital in the firm. Sorry, share capital, account number 4, and it's going to be on the credit because it was in the debit and the analyzed cash book. Debit the cash book, credit the ledger. That's the rule. And bank is always the details when you're posting from the cash book, unless you're posting into the VAT account when you say what the VAT was on. And it is 60,000. 60,000. Okay. Doesn't look like there's going to be any other entries there, so we just need to skip a couple of lines under there. Go back here. The next entry is the 11th of the 5th. It's this entry here. It's the purchases. So debit here, or sorry, credit here, debit the ledger. So we're going to open a purchases account. Purchases account. And on the debit side, that is 11th of the 5th, 2013. And that is bank, ACB for analyzed cash book. And that is the 24,000, the amount excluding the VAT. So I had 29,520 here. And I've on the credit side, I've only 24,000 on the debit. So the other 5,520 goes up here in the VAT. 5,520. And the date it was on, which was the 11th of the 5th, 2013. And it's VAT on cash purchases coming from the analyzed cash book. Okay, that's 2 down, 3 to go. Next one to do is the 17th of the 5th, paid wages. That's money going out on the credit side, so it's going to open general ledger account number 6, credit here, debit here, and we're going to open a wages account. So wages account number 6. Doesn't look like there's going to be any more in the purchases there, so you can just skip. You only need to skip one line actually. So wages was credit the cash book, debit the ledger, and the amount is 7,200. 7,200. And that is on the 17th of the 5th, 2013. That's bank, ACB. Okay. The next transaction is the sales here on the debit side. Debit the cash book, credit the ledger. That's going to be general ledger account number 1 and 2. The sales will go into the sales account, and the VAT will go into the VAT account. So back to my ledger. Debit the cash book, credit the ledger. So the sales here, 28,000 is going to go here, and the VAT down here is going to be 6,440. It should be in black. 6,440. Okay. And that was on the 26th of the 5th, 2013. Bank, ACB. And then here, 26th of the 5th, 2013. And it's on cash sales. Okay. The last transaction in the analyzed cash book that we haven't entered is the money we got from our debtor, SLD. He gave us 1,000. So credit the cash book, debit the cash book, credit the ledger. So this is going to reduce the size of this asset. So we know our Earl rule says it's going to go on the credit side as well. But anyway, debit the cash book, credit the ledger as well. And that's the 31st of the 5th, 2013. And this guy gave us money to pay down his debt, what he owes us, and he gave us 10 grand. There's the bell. Okay. So that's part B done. Part C then says balance the accounts on the 31st of May and extract a trial balance. So we're going to do that. So we've already balanced the analyzed cash book. That's done. We're going to balance all these ledger accounts. Now the way you do that is you start by drawing your double line here. And start by drawing your double line. Just a sec. I'm just going to make this easier for myself for other questions so I don't have to repeat this process. I'm just going to copy and paste it here, and I'm going to copy and paste it down here as well. Okay, so back to same balancing technique. Whichever side is larger goes in between the line of both sides. So clearly it's the debit side here is the bigger amount. There's only one entry on either side, so we don't even have to total them up to see which is larger. Sorry, my bad. That should be the larger amount goes in on both sides. And then we're going to put in our balancing figure here. And our balancing figure is 17,712. 17,712. And that's at the 31st of the 5th, 2013. Balance CD 17,712, which becomes the opening balance for the beginning of next year. So balance BD, and that is 17,712. 17,712. Okay. Next one that has to be balanced is here. Again, larger amount is the debit side, and that goes in between the line, double line on both sides. And the balancing figure here is obviously 7220. So end of the month, 31st of the 5th, 2013. Balance CD, and then that becomes the opening balance on the account at the beginning of next month. So that's at the beginning of June. We're saying SLD owes us 7220. Okay, so that's that balanced. Okay, this account doesn't need to be balanced necessarily because there's only entries on one side of it. What you get away with, they allow you to do, is to just total up so draw your double lines there, and just total up the amount that's on that side. So that's a credit balance of 68,000. We have to balance the VAT account here. If I look and see which side is larger, it looks to me like this is roughly 15,600, and this here is about 8,100 odd. So this side is larger. I'm going to put the credit side total in on both sides. So 15,640, and then 15,640, and then take away these two figures from 15,640 to get my balancing figure, which in this question here is 7452. 7452. So 31st of the 5th, 2013. Balance CD, and then 1st of the 6th, 2013. Balance BD brought down. Balance brought down, and that is 7452. 7452. Okay, sales returns only has entries on the debit side, and only one entry, so you don't even need to total that. The ordinary share capital account only has an entry on one side, as does the purchases, as does the wages. So we don't need to balance those at all. So what's left to do is to extract a trial balance. So you need a details column and a debit and a credit column. So that's going to be debit, that's going to be credit, and you title it. So the trial balance of OXO Limited it's on a particular day, which is the end of the month. Okay, so where do we start? Well, the first figure and the most commonly forgotten figure is the bank figure. How much have we in the bank account, which is the closing balance in the analysed cash book. Because it's on the debit side, below the line on the debit side, I know it's an asset, it's a positive balance. If it was below the line here, it'd be a negative balance. So it's a positive balance of 67,720. So it's debit here, so it's going to be debit in the trial balance. 67,720, and I call that bank. Okay. The next accounts I'm going to go to are the ledger accounts. So this KP Limited, it's a debit balance below the line on the debit side, and it's 17,712. That is KP Limited. Then we have SLD Limited, and he's also going to be a debit balance below the line of the debit, 7220. 7220. Okay. Then I'm going to go to my sales balance, credit side, and that's going to be 68,000. 68,000. Then I'm going to go to my VAT, which is also credit below the line of the credit, and it's VAT is 7452. 7452. Okay. Then I'm going to go to sales returns as a debit balance of 11,600. Sales returns 11,600. Ordinary share capital credit 60,000. Share capital credit 60,000. Purchases debit 24,000. 24,000. And finally wages debit 7,200. Okay, what's left to do is you total up both columns, so then they should, if you've done double entry correctly, they should match. So 135,542, and hopefully this matches. Yes, and you have completed double entry bookkeeping correctly. Every euro of debit has a euro of credit.